Hi everyone, doing a trade review for Friday, May the 6th. I had a good day on Friday trading. This is my profit. I made about $200 in the trade, in other trades, and I took 1, 2, 3, 4, 5, 6, 7. I have 7 trades and only one trade I lost money. The other trades are all winners. And my losses are very small. I only lost $18. And my biggest winner is $140. Second winner is $44. So I'll be going over some trades I did on that day and show you guys how I managed my trading. So first thing is Friday. This Friday was a bit special. I guess it's every Friday we have the 8:30 economical data come out. It's pretty important. We have four data coming out, especially the non-farm payroll and unemployment rate. That's going to swing the market quite a lot, in my opinion. And you can find the schedule on this website, and it show you the important economic data, what time it will be released on what day. So on Friday, I wake up early because I'm on Pacific time. I know I need to be sitting in front of my computer at 5:30 because that's the time the market will move, and I'll probably take a trade right away at that time. So I did that actually. This is the trade I took. So I have here two charts showing you side by side. The left chart is what I actually traded. The right chart is the same chart just without my execution. So as you can see, our economic data coming at 5:30, and it created this big green bar, big green bar. So my strategy is this: uh, when the event just come out, the data just released, wait for the first candle. So wait for the first candle. Let the first candle show you what it's doing, and because the price was like above VWAP before the release and it jumped high over VWAP, my initial bias is to go long. So I will only be going long because we are above VWAP. And so that's why there's a second point, use VWAP to follow the trend. The trend is going to up. But this green bar is too long. I'm not able to go long here. We wait for the green bar. It closed very long. And then in the second candle, we don't have a good entry. So the second candle, it pulled back. I didn't do anything. I watched it pull back. And the third candle, I think, is where I buy because I'm seeing this bottom being held. It didn't break, so I got in somewhere here and using this as my stop. And it didn't stop. The fourth candle, after I got in, actually was red a little bit because it came down, but it's able to hold the support of the first pullback candle, and then as it go upwards, I start scaling out. My major target is this level, the high of that 1 minute, the first candle, and I was holding some, hoping it can keep going up, but it didn't. So I got all out here, the last piece, but I don't have a lot. Um, in the end, I took a lot, most off right here. Um, so when I see it's not able to break out this uh, first minute high, I got out. And then you can see after I get it out, it came all the way down, right? So we had a good trade. It was not making a lot of money because it all depends on what the market give us. If the market is really happy with the data released, they will break out this level and keep going much higher, and I'll make more. But because it just made a small pop and came back all the way down, uh, we make money, but we don't make a lot, and that is totally fine. We follow our plan. I was going to trade right after the data is released, and I'm going to follow the VWAP direction. and we make money for as much as the market give us. So that's the first trade. There are also many other trades. The next trade I want to go over is at the open. So we know that when the data was released on this time, it made a small pop, did a fake breakout, and then came all the way down, right? So we're gonna draw the range of the first candle for that data release as a box. So basically this is the top, this is the bottom, and we're gonna say it's very important to see which direction the market moves. It's either going to break out to go above, or if it goes down, then it's going to break down and go much lower. So that was our thesis. So my plan to trade right at the open is using this range. Basically, above this box, go long, below this box, go short. So this is using key events range to trade afterwards. So it took an early trade for a small long, and after it break down, we're gonna look for shorts. And this is consistent with all I've been trading, how I've been trading in the past using pre-market charts to determine how to trade right at the market open. So you can see market opens below this box. So as it go up, couldn't keep going up, go down, we short here. This is the time we short. So this is my execution. I was trading QQQs instead of SPY, but they move about the same. And the QQQ was weaker initially because on the third candle, it already break down. So what I did was first candle, okay, open below VWAP, right? And open below the like a non-farm payroll data, this critical line. So as it pushes, so I wait for the first candle to form, and it was a red candle, so I continue to wait. I want to see a push up first, and if it fails, I go short. That would be a very good trade, in my opinion. And the second candle tried to push up above VWAP, but it just touched the VWAP and then got rejected and come down. So that's VWAP rejection. That's also this support line, like a previous support being lost, rejection. So you got so many resistance right at the open because the market is open below this range. Right. Then on this way down, when I break this again, I go short. So I shorted here. The synchronously draw the candle here, but I actually shorted right here. And I cover some, it's too early. I cover at a pre-market low, which is yesterday low. And then it continues to go down, hit my 2R target. I cover more, and I cover more at the 3R. And there I kind of just scale out. And it just last push down, I added small shares and then I cover. So that's one major trade. The rest of the day, I saw it break out the high of day, so I go back to go long, stop out once, and the second time I catch the trend and able to scale out. I was hoping it can break the pre-market high, eventually break it, but it came down first. So I got all out here so that I don't lose money at least. And then it came down to this opening price and then go back out to break the pre-market high. But I already stopped trading. I wasn't trading with a bigger risk here because I already made money. I don't want to give too much back. So yeah, this is the best trade I had on that day, which is knowing that the non-farm payroll data did not push up the market. Any small pop, short sellers come in and short more stocks, push it down when it lose the support of this range. You can call this anchor bar. So it's like an anchor. It's very important. It's the stock above this price or below this price. And after breakdown, I go short. It just keep going down. Very, very nice trend. And then go so much lower and then eventually come back. But I already covered most of I covered last piece here. So it's almost near the bottom of that day. Yeah. So very nice. Thank you for watching. Hope you learn something. Hope you learn my trading strategy and trading style, and it applies to your style and make your trading better. Thanks. Have a good weekend.